Hi, this is Vijay Bambwani, and I'm back with you to talk about something that should really surprise you. I draw your attention to a video that I did recently pointing out about my most high conviction trade in the year 2020 or maybe slightly earlier. Yes, I'm referring to the natural gas short trade. Let me recap a little. What I told you was that natural gas consumption normally tends to spike around Christmas and maybe a little longer because this by default is the fuel of choice for internal heating for commercial, residential, and industrial places. So, as people go out there and shop for Christmas or New Year's, malls, airports, restaurants, railway stations, offices, industrial complexes burn a lot of natural gas to heat these commercial and industrial premises. I was expecting natural gas to peak out anytime between 220 to 230 MMBTU around Christmas. What suddenly happened was markets are nobody's no man's land. Here, things can change overnight. So, while on one hand, data emerged to point out that my earlier hypothesis of shorting natural gas for my subscribers between 220 to 230 would completely go off track, which was bad news. But the news that emerged thereafter, actually we managed to turn this bad news around into good news. Let me tell you how. Step by step, the data that emerged pointed out towards a huge glut of natural gas inventories. You know, the US discloses its natural gas inventories every Thursday, which is one day after it discloses its crude oil inventories every Wednesday. So as more and more data started coming in on Thursday nights, it evolved that natural gas inventories in the world were at a staggering 5 to 6 year highs. And the drillers of oil and gas were actually being allowed to flare more and more natural gas because they were not able to store it efficiently. If you were to look outside your window as a resident of Kolaba or go and stand at Apollo Bandar, the gateway of India at Mumbai, you will see a huge fire 24/7, which is Butcher Island. That is where natural gas is being flared because it cannot be stored efficiently enough. Now, there are legal limitations as to how much gas you can flare. The US has such a huge surplus of natural gas that they were allowing the drillers to flare and burn more and more gas. Failing which, if this gas came to the market, the natural gas prices would actually collapse. This told me that 220 to 230 was a distant dream and possibly natural gas prices would come down. The second data point that emerged was about consumer spending. Google and electronic means of communication are such a blessing of this generation that you actually need to give excuses to yourself to go wrong. When I started out in 1986, to get information about the US market would take a couple of days. But today, thanks to the internet and the World Wide Web, data being announced in Europe is available in India in the same minute. So what we were basically putting the pieces of jigsaw puzzle together indicated that consumer spending ahead of Christmas in 2019 was going to be a very tame affair. Fewer people were stepping out of their houses to buy stuff. And it was not because they were buying online. The overall buying was expected to be lower. And yes, out of that lower overall buying, more and more people were buying online. So you didn't need to go out to a mall, traveling from a railway station, and these two places therefore didn't need that much natural gas to heat. So on one hand, you have a surplus which is natural gas inventories leading up to a 5 or 6 year high. On the other hand, consumption was going to be poor. So we preempted the short sale, which ideally should have taken place after December, by going short on 6th of December. And shorting late in the day, we were very happy to note that there was no drawdown, which means that you actually managed to short somewhere at the upper end of the day's range. I was frankly expecting, and I communicated this to my subscribers, that this trade would typically last for a couple of weeks, if not a couple of months. You know what? We managed to get out within 2 days. Yes. And why did we manage to get out in 2 days, and why not dig your heels and stay with the trade? Now, this is where the boots on the ground, eye in the sky, or behavioral approach to trading that you have heard from me on many occasions in the past comes in. Like I've told you in my other videos, there are 108 parameters that we incorporate into a trading signal before we actually pull the plug and trade. So, after having shorted on 6th of December, the indication on 9th of December was it was time to take money off the table and go home. And sure enough, another communication went out to our subscribers, and this natural gas short position was squared up. I'm happy to inform you that, to my sheer surprise, this trade turned out to be the most profitable trade that we have sent out since the launch of the weekly cash alert. And due to the leverage that was taken, due to the amount of drawdown, or rather the lack of the drawdown or mark-to-market loss notionally paid, this trade turned out to be a super efficient one. This is a learning experience for both the subscriber and the trading advisor, that you can indeed turn bad news around into good news by acting swiftly and being nimble on your feet. I really enjoyed doing this trade, and I hope to catch many more such trades into the future. So, before I bid goodbye, I would like to remind you, if you're watching this video on YouTube, please click on the like button, subscribe to my YouTube channel. Don't forget to share this video with your family and friends, and in the comment section, please do let me know what you think of this video and what other topic you'd like me to cover in my next video. Please do take very good care of your investments. This is Vijay Bambwani signing off for now. Thank you.